Hello and welcome to this video on possible ECB rate cuts next year. With inflation currently falling rapidly and recession looming, I expect the ECB to stop raising rates in September and beyond. Nevertheless, market participants have long speculated that the ECB will cut its rates again next year by almost 90 basis points in total. I do not share this market view. Instead, I have been expecting for quite some time that key ECB interest rates will remain on hold next year. One important argument is our inflation forecast. It is true that inflation is likely to fall further by the end of the year, but rapidly rising wage costs suggest that inflation will settle well above the ECB's 2% target next year. This would be a major disappointment for the ECB, as it would show that inflation is no longer moving towards its 2% target as hoped. In such an environment, it will be difficult for the ECB to cut its interest rates as expected by the market. While we do not expect the ECB to reduce rates next year, we expect the Fed to lower its policy rate by 100 basis points between spring and the end of next year. These differences in forecast are mainly due to the fact that the Fed has raised its rates much more than the ECB. Regarding financial markets, Euro-dollar still has some room to move upwards in the next 2 or 3 quarters. The ECB is not cutting its interest rates and it appears to be a more credible inflation fighter. However, this perception will be reversed if Eurozone inflation starts to rise again in the middle of next year. Euro-dollar will then tend to weaken again.